Hello, everyone. Welcome to this webinar today, role of a director in small and medium businesses. I'm Peter Towers. I'm the Managing Director and founder of Towers Business Development and also ESS BIZTOOLS. I'm joined today by Priscilla B. Smith. How are you, Priscilla?
Welcome, everyone. We are privileged to have Peter with us today, and I am sure that he prepared something amazing for us. It's worth watching. We do appreciate your time always. Thanks, Peter, for being with us today.
Thanks, Priscilla. And if you have any questions or comments, you can type them into your computer, into the chat, and I'll try to answer them later in this presentation. So we might just go back so we can share the screen, Priscilla.
Yep.
Okay, and obviously you'll comment if there's a need to comment on things.
Call me in.
Okay, so I've told you who I am. I'm Peter Towers, and I'm joined by Priscilla B. Smith. But the first slide I've got here is introduction. Introduction is very important for all of us. I think some people assume that everyone knows who they are when they walk into a meeting or into a room or meet a new client. And there's a very important process called the elevator pitch. About 30 seconds. Introduce who you are. What's your business, products and category? What type of problems are you trying to solve? Focus on your proposed solution. State the key benefits of your proposed solution. Please think about it. If you haven't got an elevator pitch, perhaps you need to practice. My concept is, hi, I'm Peter Towers. I'm the Managing Director and founder of Towers Business Development. My background is that I'm an accountant. I've been the Chief Financial Officer and Company Secretary of a listed public company. And I've worked very closely with small, medium enterprises. I try to bring advanced accounting skills and company secretary skills to the role that I offer to businesses, because many businesses that are growing need additional corporate governance type assistance. And that's a good lead in, I hope, into what we're going to be talking about today. But it's a good idea to develop your elevator pitch. Do you know where the term come from, elevator pitch? It came from New York, where I've never been to New York, to be honest. I've been to a few parts of America, but never been to New York. But I've read and I know that there are a lot of theaters in New York, and there's always has been. So years ago, when people were trying to get close to the directors of theatre shows, they would approach a director and they would try to get into the elevator as the director went up to the theatre. And the story goes that some of the directors said, well, you got until I get to the top, so you better start. And that was about 30 seconds. So that's where the concept of being able to introduce yourself, get the message across in 30 seconds. Now, some people do it a bit longer. They take 1 or 2 minutes. Someone said to me one day, well, the elevators are bigger these days. They go to a lot more floors, and that's probably right. So you probably do have a bit more time. But it is meant to be a basis of introducing yourself to people. And there's a couple of variations I've put on the screen there on elevator pitches. Concentrate on the benefits that your business gives rather than what you do. You know how? Well, what do we do at your business? In fact, our products and services achieve such and such. So let's move into directors. And that's what I believe we are talking to today, because many of us are directors. A lot of people are directors have only got one director in a company. I know there's why the reason for the law was enacted that way, but I don't quite agree with it, because it makes directorship a very lonely affair for a lot of people. And I think directors need to communicate and understand. Directors need to review, because there's or to be aware, because there's a lot of laws that you are liable on. And in fact, yesterday in the Financial Review, there was an article. Now, I noticed this is dated the February the 15th, so it's obviously a repeat. In a world of increasing complexity, where the temptation is to say, just leave it to the experts, boards of directors are asked with keeping it real at Australia's corporations and not-for-profit organisations. Directors hail from all walks of life with varying degrees of specialisation, and they're expected to bring their experience to bear on a broad range of highly nuanced and conflicting management and regulatory issues. To do this effectively in what is becoming an increasing professionalised role, directors need to be tooled up in terms of knowledge and expertise. And that's what I hope to be able to go through today. But it goes on to say, in times of uncertainty, upskilling is a core competency. Upskilling is a core competency. Adopting a lifelong learning mindset is now part of being a good director. So it's not a matter of doing an Institute of Company Directors diploma course 15, 20 years ago and saying you're a director for life. You need to then keep your reading up to date, keep your listening up to date, your observations, your understanding of what's going on. Because 20 years ago, nearly 30 years ago, I think, when I did the Company Directors Diploma course, I don't think cybersecurity was on the agenda. In fact, I'm sure it wasn't. So that's an interesting article. I will send this through to Priscilla. So if any of you want to download that article from the Financial Review, you'll be able to get it together with a copy of the recording of this webinar. So let's move on. And you can send that round to them.
Thank you.
Thanks, Priscilla. Let's go through what are the issues you're concerned with the Corporations Act. It's fairly thick. There's a lot of pages in it. I'm not sure how many. I think it's over 1,000, isn't it, Priscilla?
Oh, well.
It's a long time since I read a lot of it. Very long time.
It's 1,000 and going, yeah?
Yeah. And really, for a director of an SME company, there's probably only 100, maybe 200 pages of it that really affect us, but the whole act does. And one observation that I make to every company director, and I get a few surprised looks, but I can't see any of you people, but a few surprised looks when I tell them the same Corporations Act applies to BHP as what it does to that director of a sole director company. It's the same Corporations Act. There's not an act for small businesses. There's some sections in the act that relate only to small businesses, but it's basically the same Corporation Act. The other very important act of Parliament is the Taxation Act, and directors need to get a knowledge of this. And if you're not aware of something, you go and talk to Priscilla, and she will take you through what the Taxation Act is saying about a whole range of issues. And some of them really are close to the bone with directors, because if superannuation is not paid for your employees, a director can be personally liable. So you need to be aware of that. So within the Taxation Act, there's definitions of a small business entity. Turnover limit $10 million. There's also special company sizes now based on turnover. There's a $20 million turnover limit, which applies for the research and development rules. But there's also a $50 million turnover, which relates to the corporate tax rate of 25%. The big end of town, that's turnover over $50 million, pay corporate tax at 30% tax rate.
Yeah, different small business concessions apply to different categories. And I am teaching this, so if anyone wants to know more, reach out to me. Very
good. Now, one of the key comments that I make when I conduct these sort of trainings on corporate governance is court cases create law. Now, I think we all probably understand that, but it's very evident at various times in corporate matters that a judge has really made a decision which becomes the accepted practice until another judge decides to overrule it in the future. And there is a bit of a pecking order with the judiciary around Australia. There are some judges, of course, who have got fantastic reputations of their knowledge of corporate law. It's probably all that they've ever practiced as a barrister, and when they become a judge, and they become an authority, and they tend to make the law that the other jurisdictions then follow under someone believes that they have a case in front of them, a judge believes they've got a case in front of them that is so significantly different to what the precedent was created on, that they might then try to create new law. But we need to closely follow court cases. Now, if any of you decide to do the Institute of Company Directors Diploma course, you will become very familiar with some of the recent court cases because they work you through to give you an understanding of what all this means. So directors need to have your eyes and ears open to what is happening out there in the wider community, especially when it comes to the courts creating or making decisions. So let's look at some of the other major legal issues for directors. And at the end of this, you might say, gee, I don't know if I want to be a director. But if you want to run a small business and it suits to be a company, well, someone's got to be the director, and it should be the person operating the business. Fair Work Australia started about, 10 years ago. It's maybe a bit longer, 14 years ago. It's got a big impact. Workplace health and safety rules. Now, I've been around for a few years. Years ago, I was the company secretary and chief financial officer and a director of our major subsidiary company in the meat industry. We were the second largest meat group. Workplace health and safety was important, but geez, it's a lot more important now. Directors can go to jail these days if appropriate processes haven't been implemented, especially if there's been warning letters issued by a industrial inspector. And the unions are a lot more diligent these days in looking for issues and bringing them to the attention of both the workplace health and safety organisations and Fair Work Australia. So directors need to be aware of this. Environmental laws. 20 years ago, we didn't hear much about them, did we? Which is, we hear a lot about them these days. And directors need to have a overview of them. Taxation, I've already mentioned. State and territory government laws. Well, yes, we haven't only just got to worry about the national government in Australia. We've also got the various state and territories that also make legislation that can affect businesses and therefore directors. Local government council bylaws. I've had a couple of clients that I've become involved in after they've already got into a problem by they were doing something on the land that they owned, that they thought they could do, but it was outside the council bylaws. So that can cause them a lot of problems. And directors can find themselves in hot water. And these days we've got social media, and we definitely didn't have that 20 years ago. And what's your company's policy on social media? Who authorises the postings that relate to your organisation? Who's monitoring what other people are saying about your company or your business every day? And what's your policy on responding? Are you going to respond? Are you going to ignore it? And then we've got media in general. Well, media in general's probably not as high on the worry list these days as what social media can be. There's a few issues there, isn't there, for directors? And if you're running a business that's got people working for you, you've got a couple of leadership team members and you've got 10 or 12 employees, what's your control there? What's your systems manual saying as to what people can say to these organisations? Another major issue is sourcing of product from overseas markets. Again, 20 odd years ago, that didn't seem to be a big issue. But the world now, because of social media and communications and TV, has discovered that there are countries around this world that have got shocking laws and shocking treatment of human beings. And therefore, if your company is importing product from one of those countries, you could find yourself in all sorts of problem back here in the Australian market. Because if someone publishes details about your association with that country and people who are obviously being exploited, or let me probably reword that, suspected of being exploited, you might find that you're copying a fair bit of unwanted comment on social media. And perhaps you come to the attention of some of the federal government's organizations. So think about it. And you got cyber fraud, which is a huge issue. And directors have got to be aware of it. You've got to be talking to your internet provider and your web designers, whoever you've got working for you and all this, to make sure that they're implementing the best possible processes they can to prevent fraud. So let's have a look at I've got there a corporate structure for a company. You've got shareholders, board of directors, company secretary, a chair. I like having a chair of a board of directors. I always have. I was a company secretary of a public company where there used to be a debate as to whether the managing director should also be the chair. That used to be the way for a lot of companies in Australia. But I'm very pleased to see more and more have now moved that there's an independent person who's the chair. I think it's great. I saw the problems firsthand of when the managing director was also the chair. There's two different roles there, and there is an important role for a chair. And I think even in SME companies, especially if you're growing and especially if you're wanting to scale up and become larger. Now your turnover at present might be $1 million, but your plan is to be $5 million within 2 years, or maybe $10 million. As you grow up, you will have growing pains. And I think having an independent chair and a couple of other independent directors on your board, or board of advice members, but we're talking about directors today, and these are the people that have got real power in an under the Corporations Act, whereas board of advice members haven't got any power. I think there's a lot to be said to having someone who can be the chair of your organisation. So you've got someone you can sit down and have a quiet chat to who understands. So don't get someone that's a novice, never run a business before. That's not the chair. The chair should be an experienced person, normally older than the CEO, not always, but normally, because that person will have a significant amount of experience. Then you got the directors, who should be elected by the shareholders. I think it's old-fashioned to say directors should have shares in the company. That's not the modern way. You're hiring directors because they're bringing their brains and know-how to help your company survive and grow and scale up. And the board may have well appointed a managing director, or maybe the title CEO or general manager. Every business needs a boss, and you should have that person. And then I've just put underneath it some of the applications that might be happening: production, marketing, sales, chief financial officer. That's the very least. But you'll see some corporate charts, of course, that you've got 10 or 12 categories coming out from the managing director. Now, I've also put a board there with board of directors with a mentor. That's a role I do a fair bit of. I get asked to become a mentor to the board of directors. And I try to talk to them about having a chair, not necessarily me if I'm the mentor and the directors. It's a process that I've implemented for companies that I thought had the potential to grow and be very successful, but had very inexperienced leadership team people running it. Didn't have any grey hairs, if I can put it that way, around, and they a lot of them need some assistance. So that's how, if you're thinking about engaging a mentor, that's how I'd see the relationship. The mentor, of course, could be the chair. I mentioned board of advice there before. It's a growing trend in Australia, I think a welcome trend. I think what's driven the board of advice concept has been that there are thousands of companies in Australia that legally there only needs to be one director, because that's the constitution of the company that the government now allows. You only need one director. I said at the beginning, I don't really like that concept because I think it's a recipe to be very lonely. So a board of advice has got no legal power, and their role is only to advise. They shouldn't implement any sort of policy at all on behalf of the entity. So the board of advice makes suggestions, recommendations, gives advice to the CEO or the directors, and then it's up to them to implement it. And the minutes should indicate that the board of advice minutes should just say we've decided to advise the CEO or the board, whatever the point is. But then a board meeting should be held subsequent to the board of advice meeting to ratify whatever the decision is that the company wants to implement. Because under the Corporations Act, the board of advice members have got no legal position. And I've also done there one because people ask me, what's a corporate trustee? And I've presented this series of webinars all over Queensland on a project for Oz Industry a few years ago. So this is why I'm saying what people ask for, because in those seminars, which were in all the mining centres and other major cities outside of Brisbane, I was asked questions, what's a corporate trustee? Because someone had obviously heard about it. So that's why I've got that chart there. Obviously, it's the board of directors who then act as trustee of a trust. There's various steps in that process, and Priscilla can take you through that if you've got queries about using a corporate trustee. It's got a lot of benefits.
I can help. I can explain, I can help. And we do structures, restructures. Just the way the business grows, we will always look into restructuring if it needs, for different reasons. But yes, we are doing this for small business. Please reach out and we'll look into it together, and we'll come up with the best structure for you.
Okay. So one of the things I wanted to talk about today was, how do you go about appointing new directors? Well, I think you, unless it's a family member being appointed because the family says that Jim or Mary should be on the board. But if it's an outsider, which more and more people are doing, they're turning. I don't think it should be someone that you played football with at high school, or was your girlfriend that you used to go swimming with. I think you need to be looking at what skills do you need on the board, and do a director's skill matrix. I think if possible, a board of directors should have an accounting person, a legal person, and then someone that knows something about the industry that your business is operating in. So if you're an engineering consulting type business, someone from an engineering background, I think, or an outstanding business person in your area. You need to look at what training is going to be required. So when I'm working with a client who tells me they want to promote their son to the board, I say, well, if you want my suggestion, they've got to go through a training program. They've got to at least sit down and go through with me on a session like we're doing now. And normally that takes half a day. We work our way through it because I want them to absorb it. I just don't want them to sit there listening to me. I want to get their feedback on various issues. And then they should be enrolling to do the Australian Institute of Company Directors Diploma course, which is a week-long course held in Brisbane, where they can go through it. They can do an exam at the end and get a diploma in corporate governance. Mentoring by chair, that's very important. This is one of the key roles for a chair of a company, because this is what happens in good public companies. The chair mentors the directors and taps some of them on the shoulder and says, now listen, Larry, I notice you coming into the meetings and you're opening your board briefing notes as you walk in the door. That's not good enough. We've made a policy that the team's got to get those reports out to all the board members 3 or 4 days, whatever it is, before a meeting, or they've distributed them by email these days. The expectation is that you will turn up having read that material and got your brain in gear. You're ready to go. You got some questions you want to put to the CEO. So that's the tapping on the shoulder, and I've seen that in practice, and it's quite interesting. It sorts some out. Some people shouldn't be on boards. They think it's what was happening 20, 25 years ago. It was a social appointment. They're no longer. There's a lot of legal responsibility. You need to be monitoring what it says in your company constitution. Not all constitutions are the same. Some have got some very strange clauses in them, and you just need to make sure that if you're appointing someone, you've looked at it. It could have come from a general meeting of the company. That's like the annual general meeting that someone's been elected to the board. But in many cases, again, depending on the constitution, directors can fill a casual vacancy. Now, if some of you have been around for a while and are saying to you, well, what's the constitution? This used to be called Memorandum and Articles of Association, but it's now the constitution. And you just need to make sure you follow that. And I think a new director should sign an acceptance of appointments letter. I've come across situations where such a document does not exist, and it's 10 years later and there's a problem in the company. And someone's saying to me, well, I'm not really a director because they can't find that I ever signed anything. I said, but you've been coming to the meetings for 10 years. You've been allowing your name to be on the annual account. You've signed the annual accounts as a director. I'm not a lawyer, but I think you can have trouble in court if you try to prove that you were not a director. But I think far better corporate practice is that all directors should be signing an acceptance of an appointment letter. And that appointment then has to be recorded by the company secretary in the company directors register, which is a requirement of the Corporations Act, and in details lodged with ASIC, Australian Security Investment Commission. You got 28 days to notify of the appointment, because that's very important. And a lot of people monitor that. Your lenders, your people who invest in your organization or supply, your debtors might be monitoring who, or your creditors, sorry, who you're appointing to the board. Now, if any of you are sitting out there watching this and saying, well, geez, I got rung up by a guy the other day asking me to think about joining his board of directors. Well, that's who I'm directing these comments to you, if you're thinking about going on a board. Don't get too keyed up with the excitement that you've been asked to go on a board, because before the appointment is ratified, I think you need to be asking some questions and making sure you get the answers. What's the company's financial position? Is the company solvent? Oh, how do you prove that? You might have to go off and talk to Priscilla. And this might take a few weeks to establish. What outstanding liabilities has the company got? Australian Taxation Office and superannuation. Do you realise that both of those entities can take action against directors who are in situ as directors when the action is started? Nothing to do about when the debt was created. So if you join on the board of directors a company that owes the tax office $35,000 for superannuation, and you join them today, and in the second week of April, the tax office decide to take action because the superannuation hasn't been paid, they potentially will be looking at the current directors, which now could include you. So that's why it's important to do some due diligence and not just accept someone's word. Get them to produce the accounts, get them to produce the documentation back from the ATO that the superannuation and the tax instalments have been paid, because they could become your personal debt. Loans, not quite as dramatic as the tax office and superannuation, but it's also very well information for you to clearly understand what the situation is on loans that the company may have, especially if there's arrears. What caused that to happen? So I think the company should give you a new director's information pack. And within our products that we make available to directors that we're assisting, we give them a pack which goes through all of this, gives them, and basically you would then have the forms to give back to the company and saying, well, this is what I want. You want me to be on the board? This is what I want. And spell it out to them. Because you could be in a lot of legal headaches and a lot of strife that you didn't want to have. Priscilla, we might just stop for a moment there and I'll just share the screen. Have you got any comments on what I've said so far?
Well, I notice now small business goes through changes. Small business grows. Small business shrinks. And they will need assistance because some clients are guessing, like what structure to continue the business with or how to shrink the business because it's not operating anymore. Some clients, they don't even know that closing a trust has large legal implications. It's not just we make a note on the trust tax return that is final. It's a lot of legal obligations which we have to go through to actually close a trust. Or when we open a trust, as you said, what's a corporate trustee? Clients are not aware, and what's the benefits or not, why they would need a corporate trustee or something. We have 25 years of experience with this, where we can get it right. And some clients, they go for better quotes, cheaper quotes when they register a company, and then they find themselves that there is no constitution issued. There's no lawyers ever signed anything, so their company is not backed up by a constitution. And this is bad. We don't have one. I said, yeah, because we only pay 300 instead of 800 to structure a company. But that's the reason, because there's no constitution. Without the constitution, as you said, Peter, where are we going?
Okay. So, yeah. So, as I said at the start of this, I think directors need to be careful, need to be aware of what is happening. So hopefully I've got my PowerPoints back up. So let's look at some of the responsibilities of directors. And I should have had up at the top there, be aware of what's happening. Just don't accept everything, because you could end up in hot water or having significant worries because of potential legal action against the directors. So the responsibilities are the directors can appoint the managing director. I think directors have got a definite responsibility to make sure systems have been put in place. Now, I think the board of directors should be grilling the CEO, and I'm not worried that the CEO might virtually own 100% of the company. If he invites you to be on the board of directors, you have got a legal stake in what's happening. You could be caught up in a mess. So therefore, you need to know that these systems have been put in place. Are there systems for acquiring an asset, buying a block of land, buying a house? Whose name's the property going in, especially if it's the company's money paying for it? Simple as that. I've seen situations where companies have bought land and buildings, and when we went to do a review some years later, and normally when those things happen, there's a problem. That's why I was there. There was a problem. And we found the title deed was nothing to do with the name of the company. It was in some other entity's name. Why?
Yeah.
No one knew anything. Well, someone did, of course. So is there a system for the asset acquisition? I think a director should be demanding the paperwork's put in front of them, to be honest. Intellectual property. What happens with the intellectual property? Intellectual property can be worth millions of dollars these days if it's properly handled and nurtured. But sometimes it can be lost somewhere. The key employee leaves and he's been able to take all the files with him and all the information in his or her head, and off they go. Well, as a director, I think you should be saying, well, to the CEO, what's our rules on intellectual property? How do we safeguard our intellectual property? And that will vary company to company. But if people haven't got rules, especially in this day and age, 25 years ago, no one really talked about intellectual property. Today, it's a big issue because people have seen how people can become billionaires in a couple of years because of new technology. Now, there's a few funny stories getting around on the internet at present about what's going on with a couple of companies in America where key people seem to have all gone across to the opposition and the market's starting to ask questions. This is intellectual property because a lot of intellectual property's got two legs. It can walk out because it's in people's heads. So what's going on in the company to control it? So that's what I got there, the development and protection. What are the accounting systems? Debtors. Who analyzes the debtors? I think a director's entitled to say, I want the assurance that you're going to show me how you control this very important asset called debtors. What are the debtors' days outstanding? Are you going to report that to us every month in our board papers? Because I want to know. Same thing with inventory. Get the leadership team to define what they reckon the stock turn's going to be for the various months of the year, and then get the report back so you can compare it. Creditors, bank accounts. What's going on with workplace health and safety? Are there rules and regulations? Monitoring the systems. Look at them all there. Risk management, risk. There's an enormous amount of risks. Equipment risk, cash flow management. Very important. I noticed a couple of weeks ago in the financial review that the CEO for MYOB had indicated that his observation, and he was talking about the economy, and there's a lot of problems out there for SMEs, as we all know. And he commented that there's a lot of people start off businesses that it's a great idea, but 6 months later they're in strife because they don't understand cash flow management. No one ever taught them. I think it's a real criticism of the accounting profession that obviously Priscilla and I are part of. But in lots of cases, it's because the client or the directors, oh no, we don't want to know that. We know how to draw a check or we know how to transfer money. Well, it's not that. Cash flow management's a lot more. You need to be conscious of where the money and how long is it going to be tied up. I don't think enough people understand the cash flow movements in their business. You go and buy something today, you have to pay for it because you're a new customer. You've got to pay for it within 7 days. So 7 days later, you own something. You then don't sell it until 125 days later. And then you sell it to someone on credit and they take 80 days to pay you. Well, if I've added all that up quickly in my head, I think we're about over 250 days that you've funded that acquisition. What did you budget for? What's your forecast? If you only budgeted that process was going to take 90 days, you're going to have cash flow problems. What about the environmental issues? I live in North Queensland. There's been a situation where a landowner had a gazetted road that was being gazetted nearly 100 years ago through mangroves on his cane farm where we grow sugar cane, and he decided to do a bit of work on that road and seal it up so he could get access to some of his paddocks. Now he's going through a mangrove, so to create that sealed road through the mangrove, obviously some mangroves, unfortunately, were cut down. He's 76 or 77 years of age, and he's just copped a fine of $245,000. And there's all sorts of other penalties, and his legal bills would have been enormous, I think. So this is the environmental issues that I again suggest that 20 or 30 years ago, he probably would have been able to do that and no one would have ever known or taking action. So it's different rules. What are the monitoring systems for financing arrangements, payment of tax, payment of super, customers? There's a whole range of things that directors need to be thinking about. And this is one of my pet ones, shareholder communication. I think a lot of SMEs that take on investors forget this. They accept the money and then forget about it. For some years, in fact, for 12 years, I was a consultant for a government Oz industry government program called COMET, Commercialising Emerging Technology. So we work with people who wanted to develop new products and services. And I had a lady who was a brilliant scientist, and she was developing all sorts of products and raising capital. And when I was going through her plan with her, I noticed that she was going to report to her investors every 6 weeks. I said, "Oh, you don't have to do that. No, once a month, once every 3 months is not a bad target that I was trying to establish with the clients that I was helping." And she said, "Peter, I'm trying to raise about $1 million at this stage, which is what it was. But my long-term plan tells me sooner or later I'm going to be raising a lot more money. I want some of these original investors to come back to me. Therefore, if I communicate with them, even if it's an email that says, yeah, I'm still alive and we've achieved this in the last 6 weeks, they know that they're going to get communications from me, and hopefully they'll realize I've been honest with them." And today that lady has raised a lot of money and has got a very successful business. Stakeholder communication is nearly the same as shareholders, I think. What's the culture? You know, some companies have got a shocking reputation in the market with team members and with suppliers. I think it's important that as a director, you're looking at the culture of the organization. We've done all this before we get to a business plan. But businesses need business plans. Companies need business plans. But they shouldn't be something that's written up by someone like me, even though I write a lot of them. But I always insist that I'm working with the leadership team. And some of them don't like it. I say, no, we've got to turn up and we'll have meetings in 2 to 3 hour sessions. And we'll have a break every hour, make them get up and walk around, because I want their input. Because at the end of the day, it's the leadership team that's going to implement the business plan. Not the writer, not me. All I'm doing is writing for them. They'll tell me they haven't got time to write it. Now, as a director, that's how I want a business plan prepared. I don't want to know that some external consultant sat down and wrote a business plan and there was really no input at all. Because if there's no input, there will be no ownership of it. And it's very important that the leadership team, the CEO and the heads of those key sections that we had there before, production, buying, marketing, selling, the CEO, the CF, Chief Financial Officer, if there's a separate person, they've got to have the ownership of the business plan. Where's this business going to go? What capital raising needs to be done? It's a lot easier today for a smaller company to raise capital than what it was 20, 25 years ago. We got Section 708 of the Corporations Act, where you can raise up to $2 million from 20 people, that's all, in 12 months. We've got crowdsource funding equity raising, whereby a company with a turnover under $25 million can raise.
Something here with the capital raising. Next month, so the next session is going to be about that.
Okay.
We have previous recordings with Peter Towers. And so we will launch one of those to see how we can help if you would like to raise capital. And what is crowdsource funding capital raising in the first place? We want you to understand and to know what it's all about, isn't it, Peter? Next month, I'll launch that recording, what we've done previously.
Okay, thanks, Priscilla.
Yeah, we don't have your screen anymore. Just come back.
Yeah, you should have it now.
That's it, before we forgot, because we want our members to be informed.
Yeah. Okay, so capital raising, you got to be careful of insolvent trading also, because insolvent trading can come back to be a personal responsibility of the directors. So this means, I think, directors have got to be adamant. In fact, I wouldn't be involved in a board of directors if I was you, if you're not going to get properly prepared monthly financial accounts compared to the budgets and cash flow forecasts that have been prepared as part of the business planning process, and that you get the key performance indicators and the business metrics. Now, quite frankly, if the company can't do that, they need to raise money, either from their own money or going to the public and using the two that I talked about, or the other way to raising money, of early stage innovation company, or going and trying to talk to some other high wealth individuals. Because if you trade and the company is insolvent, the directors can pay the penalty. You can be personally liable. So you need to get proper information each month so you can judge it. The other liabilities of the Australian Taxation Office, payments, workplace health and safety, environment, we've talked about all those, so I'm just going to do that. Workers' compensation is an important one. You need to make sure the company's got the workers' compensation policy and that you're following through. The Corporations Act's got liabilities in it, so is the state legislation. I think it's very important that within the board structure, that every director declares their interest, and that would be upfront. And the new director gets appointed. What companies are you involved in? What partnerships are you involved in? I think that's something that should be declared upfront, and the company secretary should be noting that declaration in the official minute book. But then it's what happens afterwards. It's very important that if any sort of report comes in front of the board of directors that a director has an interest in, the director should raise their hand and declare their interest. And the normal process is the director then leaves the room whilst that matter's discussed. Or if they stay in the room, they do not vote on the issue or even talk on it. And the company secretary should be asked to ensure that the information that they have abstained from voting on that matter is clearly documented. And you should be checking that the minutes say, if the director left the meeting, that Mr. Brown left the meeting at 11:04 and returned at 11:32. Because minutes of board of directors meetings can become very important evidence in a court case if things have gone off track. And it's in your interests now to raise these issues as a director. Say, no, I declared my interest and it's not in the minutes. Or I left the meeting for 31 minutes. It's not recorded in the minutes. You might have the company secretary upset, but we're not worried about him or her. They've got a role to do. They're getting paid to do a job. They need to do it. So let's just look at the managing director, appointment, responsibilities and duties. Again, check the Constitution. The Constitution might already state all this or might restrict what they can do. What's the board of directors meeting? That's where the appointment should be ratified. There could be specific responsibilities if the board wishes. The new member appointed to the board might be an expert in some aspect of the business. Well, ask that person if they'll take on an additional responsibility to monitor something. I think it's important that if you've got a chair in your organisation, that it's clearly identified and confirmed in the appointment of the managing director that that person reports to the chair. I've seen some situations where that hasn't been properly documented and it can cause problems. The whole concept of having a chair is the chair is the figurehead, head of the business. Irrespective of who owns the shares, that person's the head. And most managing directors will respect that. But unless it is clearly documented, there have been issues at times when it hasn't worked the way it should. And I think it's important that there's clear responsibility given to the managing director that it is that person who is responsible for employee appointments, team member appointments. I've seen situations where an individual director on the board thought it was going to be their responsibility, that they were going to be able to appoint the sales team because that director had a background in sales. I don't agree with that. But again, it doesn't matter what I agree with. It's what your company resolves. I'm raising this so you think about it and say, oh, okay. I think it's important that the responsibility of running the day-to-day activities is allocated to one person, the managing director. The managing director then appoints those key reports back to him or her, the various leadership team members. And one of the leadership team members may in fact be handling the employment of the team, the whole lot of them, or maybe just the sales team, whatever. But the board needs to be involved in this. Otherwise, there can be problems. And some of these problems don't emerge until you get involved in court cases. So the establishment of the management team structure or the leadership team structure is very important. Portfolio responsibilities. Every so often I sit down and work out how many portfolios there are in a company. And I got somewhere between 45 and 60 for most companies. You can get back to things like who opens the doors of a morning, who shuts them down of a night, who does the security service ring if there's a problem at 3 a.m. But there's a lot of other issues too, of course. Who's responsible for what? Otherwise, everything will come back to the managing director or the owner of the business if we're not talking corporations. I think it's important that that's outlined and everyone knows who's responsible for organising the cleaning, who's responsible for making sure there's a gardener that's going to do the landscaping around the factory if you've got landscaping around it or whatever. Responsibility for the operations of the business is the managing director. Report on current business activities is something the managing director should be reporting on at each meeting. Every company needs a company secretary, and I think it's a good idea to have someone other than the managing director be the company secretary. It could be one of the directors, or it could be the company's accountant or chief financial officer. It's an important position. It's covered in the Corporations Act. And the role is to prepare the agenda, not just send it out, send it to the chair and get the chair's okay to it. That's very important. I've seen some company secretaries that think that they're going to run the company sort of thing. And that's not what it's all about. So the agenda should go to the chair, and the chair comes back and says, I think that's happening. I'm happy with that. There needs to be a follow-up on business arising from the last meeting, and the company secretary should prepare that and again submit it via the chair. And follow up the action plan from the last meeting. It's no use having these meetings once a month to look at the accounts unless there's follow-up on the matters that were discussed. The company secretary should confirm the next meeting, date, time and place. Even if it's always on the third Tuesday of the month at 10 a.m, I think they should still confirm it. It's amazing how many mix-ups can occur, and it's out of respect to the people that are on the board, because some of them will be on more than one company board, and that way you're getting it clearly identified in their calendars as to when your board meeting is on. I think this is probably the most important, one of the most important comments I'm going to make today. I really believe directors need to be turning up at the meetings, and I said it before, with their brain in gear. They've read the reports, they've got some notes written down, they've got green highlighting marks all over their board papers, which is the way I tend to act, and they're ready for action. When I was a public company secretary, which was 20-odd years ago, 25 years ago, at times a director would turn up and you could see them opening the envelope, the large envelope that we used to send our board papers around in. And I was not very impressed, because my team had battled to get those reports into their hands. And this is in the era I'm talking about, was pre all the emails we got today. So these things were all hand delivered, and we had directors in 3 states, and we're all converging on Sydney, where our public office was. And you'd see someone walk in, opening up the envelope as he walked in, and then trying to quickly scan the meeting, scan the agenda, scan the reports. And those reports were probably over an inch thick. And financial accounts, key performance indicators, reports on all sorts of things. We're in the meat industry, so livestock reports, overseas market reports, everything. Now, if you're going to be a director, I think you've got to play the game. Directors get paid a fair bit of money these days, and even in SMEs, to make it all work, I think it's important that you're paying your directors, and then you can hire and fire. Because if they're not performing their role, they shouldn't be on that job, whether they're the family's very important son or not. I don't worry. They've got to play their part. So please do it. So 72 hours is the time I like. A couple of companies that I've been involved in have got a longer period whereby they want to get the information. This company secretary should prepare the minutes of meetings and the action plan. And the minutes and the action plan and everything should go via the chair. I don't think you should ever send anything out unless the chair's approved it. And that's what I've got there. Send the minutes and action plan to the directors so they know what's going on. So you've got some personal responsibility, and we're just about near the end, Priscilla. Keep yourselves informed is very important for a company director. Read reports before the meetings. I think I've emphasized that enough. Ask questions. I've had people say to me, oh, I didn't ask questions, so I didn't want to show me ignorance. I said, well, I think half the questions at board of directors meetings probably show that they did not understand something. But don't worry about your ignorance. Ask it. And if you don't understand, and it's a legal matter, ask the board to appoint a solicitor who's going to show you, or a barrister. It's very important. Just don't agree to something if you don't understand it, because the legal repercussions can be quite significant. So ask questions. And that's my next one. Ask legal or expert opinion on something. Because some of the issues that directors become involved in these days, not only in public companies, but also in small private companies, are quite complicated. And you probably need some help. You need to declare your interests. We talked about that before. It's very important that there's confidentiality of what goes on in the boardroom. Very important. And read the minutes carefully. And if you disagree, raise questions with the chair, not with the company secretary. Go straight to the chair and say, I didn't say that, or I left the meeting for 10 minutes and that's not recorded, or I voted against that. That's another very important point. I think you should always record if someone voted against a motion. That might be very important in a court case. And the court case might be 4 or 5 years' time. I hope not, but... And if you're unable to perform your duties, you should resign. Don't say, oh, yeah, I'll find time to do this. This is important. And the law will not give you any leeway if you have just been shirking your responsibilities. Doesn't matter what other jobs you've got on your desk. Doesn't matter how ill you are or anything. If you can't do the job, you should resign. And you should try to find some quality time each day. Time to think, time to plan the future, and not working on the tools all the time. Have a bit of relaxation and think about it. Priscilla, that's the overview that I'd like to present today to everyone.
Amazing and very valuable for our members. They are all small, owners of small business or director or becoming directors as we speak. And what's more important for them to remember, being a director or owning a company, you don't only have rights, you do have responsibilities, and you have to be aware of it. And Peter did shed a lot of light on this today, and I hope that you appreciate his valuable contribution.
Okay, well, I know our allocated time is finished. We went a bit longer than what I'd planned, but there's a lot of issues there. So if any of you have got any questions, I'm happy for you to send me an email. You can send it via Priscilla. But good luck with being a company director. It's a very important role, but as Priscilla just said, it is a very responsible role as well. And don't do it in a half-hearted fashion, because it can come back to really bite you. If you do, you can get caught up. You know, we've all heard of the little old lady. It's 85 years of age. That's never been to a director's meeting, but she was a co-director with her husband. The husband's passed on. Suddenly she's the director, and all sorts of things start to emerge, and she can cop the flack. I've heard of a situation where a lady lost virtually everything, lost the house, lost everything, and the court showed no sympathy. In fact, in that case, the judge said, you've had 25 years to change this situation since your husband passed. You didn't. And I think what had happened, one of her relatives was running the business and he hadn't done it all legally or ethically, but she paid the price. Okay, so thank you very much, and we'll talk again sometime.
For your valuable time, Peter, and we always appreciate you coming to us live, and we're looking forward to having you back live.
Okay, thanks, Priscilla. Thanks, everyone. Goodbye.
Thanks for your time.